Film projected to make as much as $155 million in its opening weekend. And that's a Bloomberg Business Flash. Carol and Tim?
Love me some Thor and some Chris Hemsworth.
You are like a big Marvel person, Carol.
My daughter has gotten me hooked, and she makes me watch them in a certain order.
So you're going to go to the theater to see this?
We are, no, we'll probably wait. We usually wait till they come out.
Okay.
All right. We do want to get to a story that, to say the news early this morning was anything but stunning would be a lie, because it was absolutely stunning, staggering, because as you probably know by now, former Prime Minister Shinzo Abe, Japan's longest-serving premier and a figure of enduring influence, dying after being shot at a campaign event earlier on this Friday. It's an attack that shocked a nation where political violence and guns are rare, so it is shocking to him on so many different levels.
We've got Jody Schneider, political news director for Bloomberg TV and Radio, in this studio with me right now. She was on the economy team at our Bloomberg Tokyo bureau from 2015 to 2016. We're eager to talk to her about Abe's legacy and really what this means for relations between not just Japan and the U.S., but Japan and the world. But first, Jody, I want to talk with you about how shocking this was, because as Carol mentioned, this is a country that it's illegal to have a handgun and that has very few gun deaths each year. How shocked were you this morning?
Yeah, I mean, I get up early. It was about 5 o'clock in New York, and I, got on my phone, and first of all, my WhatsApp had sort of blown up. People still communicate, internationally on WhatsApp, and some of it in Japanese. And I thought, come on, this is, Abe's been shot, and then of course it was he had died. It was really shocking. First of all, he is sort of the one person, Americans would associate with Japan, right? That's the person we know, longest-serving prime minister in Japanese history. And that he had been shot, at a campaign rally. It just, it's sad that in the U.S. we've gotten a little bit used to, shooting deaths here, but in Japan it's really unheard of. It is truly, the word shocking is very relevant in this context. And also, given that he was the longest-serving prime minister there, had a term, Abenomics, associated with him, given using his name, he really is probably among the best known Japanese figures to people outside Japan. I would say of anyone. So it is really shocking, and he leaves a legacy. But at this point, it's one of these ones you're still sort of sorting out.
Yeah, exactly, right. I feel like there's so many questions, like why? Was this just something that was just so random, or was there reason, or what? And I guess we're going to wait for some of these questions to be answered. But Jody, because you were there, you understand. I remember Japan when it was like buying up everything. I remember art, real estate in the United States. It was just on such a upward move trajectory. And then, of course, he came in after decades of stagnation in that economy. What does he mean economically to Japan? What does he mean politically to Japan?
Yeah, and I think and those are the right questions. First of all, he raised Japan's profile in global affairs. Before him, or the several prime ministers before him, I'm not sure most Americans or Europeans could name the Japanese prime minister. Everybody knew Abe. They knew Abenomics, right? And so he really did, cement those ties with the U.S. and with countries around the world. Cemented an Asia alliance that really was, sort of wavering, really backed the Trans-Pacific Partnership, which of course didn't come into being because once Donald Trump took office, he wasn't, he didn't want to continue with it, but he still pushed for trade among other countries and was, over here a lot in the U.S., including with Trump. He was the first visitor, international visitor that Trump had, international head of state that Trump had after he was elected. He came, he played golf with him. He tried to cement that relationship. He's a big figure in a lot of ways. With the economics, with Abenomics, it made some difference, but it wasn't wholly realized. He really tried to, wanted there to be, it actually led to higher stock prices and a weaker yen that supported Japanese exporters. He also had Womenomics, which was trying to get more women in the labor force. Japan faces this terrible demographic problem of just not enough people to be in the labor force, and he really pushed for that.
Was that successful?
Somewhat successfully. There were more women in the labor force when he left office than there were before he joined, before he was prime minister again, but it was they tend to be in part-time kinds of jobs. It's very hard for women to rise in the corporate world in Japan, especially mothers. Once you have kids, they have what they call the returner problem. Coming back in becomes very, very difficult. Childcare is a very big issue in Japan because the lack of immigration has made things complicated there. So it's really an interesting question how much of this was messaging on Abenomics and how much of it was real. But the fact of the matter is, it was something that people were discussing on the world stage, and it gave a lot of attention to what he was trying to do.
Yeah, and it's interesting, just reading through some of the commentary and just talking about, he was still young, 67, a real impact when it came, to the country generally, and the influence he had at home. So it will be interesting to see, how things play out in the aftermath. But man, just devastating news. And Jody, good to get some perspective since you were there on the ground there when he was a part of the government. Bloomberg's Jody Schneider, of course, she's political news director of Bloomberg TV and Radio, joining us in our studio.
Well, let's go down to Washington, D.C. for a check latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden is taking steps to protect access to reproductive health care services like abortion and birth control by signing an executive order. Speaking at the White House today, he had harsh words for the Supreme Court for its decision overturning Roe v. Wade.
This was not a decision driven by the Constitution. Let me say it again. This was not a decision driven by the Constitution. And despite what those justices in the majority said, this was not a decision driven by history.
Biden urged Americans to vote in November, saying Congress now has final control over the issue. Japan remains stunned by today's assassination of Shinzo Abe, the nation's former Japanese prime minister. He was shot dead while campaigning for his party's nominees ahead of Sunday's parliamentary elections.
It was a shock to the Japanese people and to their vibrant democracy, Tobias Harris of the Center for American Progress, an Abe biographer, said in a Bloomberg interview.
Japanese election campaigns are still politicians getting out there on their feet and interacting with voters directly. Does this mean the end of that? Is there going to be security cordons? It was a strength of Japanese democracy that voters had as much access to their representative to this day.
It's a typical scene in Japan's election season for candidates and party leaders to campaign on the back of a sound truck. Gun violence is not a typical scene in Japan. In Washington, Irv Chapman, Bloomberg Radio.
In the UK, Rishi Sunak has entered the race to become prime minister. Sunak was chancellor of the Exchequer before quitting this week to protest Boris Johnson's leadership. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, live here on Bloomberg Business Week. We've talked already a lot about Tesla. I've talked about the run-up that we've seen in the share price. Tesla, one of your top-performing names in the S&P 500 over the last 4 or 5 days. And a lot of it had to do, Tim, with something we talked a little bit about, that the Chinese shipments, so the Chinese Teslas that are made at the factory in China, soaring to a record as the plant has gotten back up and running. They've been dealing with COVID, but they seem to be kicking out those Teslas.
Yeah, let's talk numbers here. Tesla delivering 78,906 vehicles in June. That's more than double its total a year ago, up 145% from May. That's according to China's Passenger Car Association. Tesla shipped 77,938 of those cars to the local market, and just 968 units went abroad. That's the design, right? They want the cars that are built in China to stay in China.
That's a big number. I mean, here's some comparison. Tesla's monthly deliveries from China sunk to 1,512 vehicles back in April.
That's what lockdowns do.
Right?
Yeah.
So if we talk so much about the economic impact of these lockdowns. Well, there it is in just really stark numbers. That was in April. They had zero exports. The Shanghai shutdown forcing the company to suspend production for around 3 weeks. The loss of output from its most productive plant contributed to the company getting fewer cars to customers in the last 3 months from either of the previous 2 quarters. So there's perspective on how important that factory is.
Overall passenger vehicle sales in China increased 22% from a year ago to 1.9 1.97 million units in June, according to the PCA. New energy vehicle retail sales, those are electric, including Tesla, came in at 532,000, up around 131%.
Hey, can we just get to the other?
Oh, yeah,
Elon
let's
Musk
do that.
thing? All right, so billionaire Elon Musk, the CEO, as you know, of Tesla, saying today that he plans to increase childcare benefits at his companies, quote unquote, significantly.
Yeah, he says in a tweet, kids are worth it if at all possible. I'm planning to increase childcare benefits at my companies. Hopefully other companies will do the same. And the Musk Foundation plans to donate directly to families, hopefully details to be announced next month. We can talk a lot about this, Carol, but this has to do with the 9 kids now that Elon Musk has.
Kids are worth it if at all possible?
Yeah, if possible to have them.
Oh, I got it. Okay. Sorry, just had to make sense. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Courtney Donahoe from Bloomberg World Headquarters. We are minutes away from the close. Technology stocks, keep an eye on them. They're on track to notch their longest winning stretch of the year with investors snapping up beaten down shares. The Nasdaq, by the way, has surged nearly 5% this week. Stocks right now slightly higher, and we check the markets for you every 15 minutes throughout the trading day on Bloomberg Radio, with the Dow up 17 points, 0.1% at 31,397. The S&P up 2 points, 0.1% at 39.05. The Nasdaq up 19 points. In other news, Labor Secretary Marty Walsh is upbeat about contract negotiations between West Coast shipping companies and thousands of dock workers. Talks have gone well past a previous deadline. Walsh told Bloomberg News the contract is huge and the talks are challenging. And Ford is recalling 100,000 hybrids and expanding in existing recalls of traditional SUVs. There are worries that the cars could catch fire. The cars involved include Escapes, Mavericks, Lincoln Corsairs from model years 2020 through 2022. But call your dealer. And that's a Bloomberg Business Flash. Carol and Tim?
Thank you so much for that update, Courtney. Really appreciate it. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. Boris Johnson was nothing if not tenacious. In recent weeks, the UK Prime Minister had shrugged off a relentless series of setbacks and embarrassments, almost all of his own making. The latest induced two of his most senior ministers to resign this week, prompting a cascade of further departures and a surge of demands from conservative lawmakers that Johnson step down. The pressure finally worked. On Thursday, Johnson announced his resignation. The tasks awaiting his successor are unenviable. The UK faces serious and mounting challenges when it comes to the economy, Europe, public services, and industrial relations. Building consensus on these questions within the Conservative Party, let alone in the country as a whole, will be a challenge for the Prime Minister. At the moment, perhaps the only idea commanding wide support is that Boris Johnson was no longer up to the job. This editorial was written by the Bloomberg editorial board. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, just got about 10 and a half minutes left in today's trading session. We are getting ready to wrap up this holiday shortened trading week. We've been bouncing around a little bit, and we're actually seeing a slight gain on the NASDAQ, but we're definitely off our highs of the session. So, Tim, let's get to it.
We got Charlie Massimo, Senior Vice President and Financial Advisors at Wealth Enhancement Group, joining us on the phone from Blue Point, New York. Charlie also specializes in planning for families impacted by autism. We've talked about that with him in recent months. Charlie, really good to have you back with us. How are you?
I'm great. Thanks so much for having me again.
Well, at least when it comes to today, the S&P 500 is searching for direction, bouncing between gains and losses. As Carol mentioned, down, well, now it's not exactly, it's up, it's flat, okay? It just keeps turning red or green when I look at the terminal right here. Help us make sense of what's going on in the context of that hotter than expected jobs report that we got earlier.
Well, I think you have a lot of people focusing on a short-term number, which certainly is important. But I think when you stretch it out, it's kind of showing that the economy is still really strong, and you see jobs continuing to grow. And I think you're finding the market's trying to find a bottom here. And I think this has been a very constructive week, 2 weeks actually, for the market. And again, I would never predict the bottom. You just never know where it is. But I think this has been a very constructive week on the positive side.
Well, and what does it mean, though, in terms of, I mean, do you want to see a day where we just tumble like crazy and there's a lot of strong volume, or do you feel like we've already had that day?
Well, certainly we won't know until it's happened, but I'd rather see things kind of creep along than either go straight up or straight down, which is never really that healthy for the market. But when you start to see increments, small increments, either down or up, and each day it seems like we're making higher lows. And I think that's, again, a very positive impact for the markets. And again, I think investors need to always kind of ignore the short-term noise and continue to stay focused on what their long-term vision and goals are.
It's easier said than done, right? So much of this is psychology, and so much of it, I think, for many investors, especially long-term investors, is trying to look past those short-term moves. But there is a lot to be concerned about, at least in the short term here. Yes, we got a strong labor report for the month of June, but Charlie, there are a lot of concerns about inflation, about an economic slowdown, not just here in the U.S., but globally as well. And I wonder what you think in terms of what's priced in right now when you take a step back and think about all the challenges that the U.S. and world economies are facing.
Yeah, it's a great point. And as an investor, even in good times, there's always a reason to be concerned or be fearful because there's always something out there that could be the next shoe that drops. But again, I think there's a lot of transparency with the Fed. They've told us a lot. I think we're expecting a lot of what they're going to do. We're reading about Russia every single day. We're not seeing any additional surprises there. So I think there's a lot of the market that's already been priced in because of the transparency of the Fed and because now expectations are fairly manageable. And I think the next hurdle is going to be next week when we start to see earnings reports.
What do you anticipate that we'll get from earnings? I know we're expecting still earnings growth, but I think there's some concern about margins and margin compression. And I'm really looking forward to, like you, I think, to the commentary that we get out. What kind of picture do you think they might paint?
I think they're going to be more positive than people are expecting. We've had positive guidance for so long now, and I think that positive guidance is going to continue. And I think when we have some surprises to the upside, I think you're going to see I think you can see a fairly explosive market on the upside next week when we see some earnings that are fairly surprising. You have to remember, we're not investing in stocks. We're investing in great companies. And to think that these great companies lost a third of their value in 6 months, I see that very hard to fathom. So I think you're going to start to see these strong companies produce some very good numbers.
And just to do a little bit of a tease, Tim, one of my gainers actually has to do with a name that analysts are like, look at how much it's been beaten up. Look at its price to earnings, saying that maybe it's just time to buy it. Like, I do think you do see the analyst community, the investment community looking at some of these names, starting to look at the fundamentals and saying it's kind of overdone. Charlie?
Yeah, I totally agree. And I think as an investor, you need to look at your portfolio. You need to understand what's in it. And now's the time to kind of reposition your portfolio, take advantage. This is not the time to get fearful. This is the time to get aggressive. I know T-bills, short-term T-bills are paying 3%, looks real attractive. But when you look at every bull market and to give up 20 to 30 to 40% returns, which may come in the next year to 2 years, again, you have to be aggressive as an investor right here. Prudently aggressive, but certainly aggressive.
But what about somebody who's saying to themselves, okay, I want to be aggressive right now, but if I do this now, then 2 weeks or 2 months from now, we could see another 20% decline, and I'll be kicking myself.
We can always say that. Look, in the short term, I can't tell you where things are going. I don't think anyone could predict it. But in the long term, I could tell you 3, 5, 10 years, the markets will be much higher than where we are today. But again, you need to be prudent. I always say this thing, you don't want to have beer muscles, in being aggressive.
Explain what beer muscles are, Charlie. We were talking about this on our planning call this morning because our editor, Paul Brennan, in his notes to us, brought it up. What are beer muscles?
Paul Brennan, is he shaking his head? Does he have beer muscles? What is he doing, Tim?
He's got 2 thumbs up right now.
Okay, good. All right, take it away, Charlie.
Yeah, listen, we all have those beer muscle experiences in college that we wake up the next morning and regret. So many investors do the same thing in bull markets. Bitcoin is the greatest example of people flexing their beer muscles, and there's no right for many investors to have Bitcoin in their portfolio, but certainly it's the fear of missing out. And I can even name other names, better companies like Netflix, Alphabet, some of these companies that are down 30 to 70%, yet investors were gearing up on owning these shares when they were 2 to 3 years away from retirement because they were afraid of missing out. You have to stay disciplined and you have to stay prudent in both good markets and bad markets, and that will help you get through any type of market.
Netflix is down 69% so far this year.
It's wild.
Yeah.
Yeah.
Yeah. People think stocks can't come down until they come down.
Markets go up, markets go down. We talk about it. Hey, Charlie, thank you so much. Really appreciate it and good to catch up with you on this Friday. Charlie Massimo, he's Senior Vice President, Financial Advisor at Wealth Enhancement Group.
Beer muscles, Carol. We had beer jackets in college. I went to college in Central Maine where, in January it's like 0 degrees.
What, to keep you warm, you mean out in the cold?
Yeah, so you have a few beers, you get a little warmer.
Oh, is that
beer
how it
jacket.
Works?
Yeah.
Nice to know. Beer muscles. I thought beer muscles is like lifting, a 6-pack in each arm.
Maybe.
Something like that. All right, just a few minutes left to go in today's trading day. It's really, I feel like, been about the bond market because we've seen yields move up big time off of that jobs report. Right now, stocks, really little change on the day. Right now, we want to head over to our TV team, our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We're counting you down at the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bells. Here to help take us beyond the bell. It's our global simulcast with Carol Masser and Tim Stenovic putting in 2 days of work together this week. We welcome in our audiences.
Hey, that's 4 days
across
if you combine
Bloomberg
them, okay?
television, radio, and YouTube on this week. And look, I don't blame you guys. You should have taken off today because nothing's really happening in this market. We're basically launching all the major indices and volume very light here.
Yeah, I feel like I missed everything when I was homesick. You're right. I mean, take a look at what we're seeing. There is light volume, but the major indices are pretty much going to end up flat on the day, Tim.
Yeah, but there was some searching for direction today. You had the S&P 500 going between, gains and losses today more than a dozen times, actually close to 20 at my count.
Of course, coming off of big jobs data. And I think what's so interesting when we think about the equity markets, we fold that over into the bond markets, Caroline, are some of the do what I hear, not what I say, or do what I do, not what I say, and sort of the ideas around where
Wait, you've
talking
lost
about.
me. You totally lost us.
It's a Friday, and it is.
I think I got it. I think I
you
got it.
it, right?
I'm glad someone got it.
I'll tell you what's extraordinary, though. We are up for just 5 days in a row on the NASDAQ, on the S&P. That's the longest winning streak all year. Wow. That just shows you just how
How's volume, though? How is volume?
Volume's pathetic.
Not a lot of conviction.
Is that a technical term? Pathetic.
Yeah, I mean, there's nothing there. I mean, I'm looking at right now, when you look at sort of the volume across all of the major tapes here, right now, roughly about 9 billion shares swapping hands. The average on a yearly basis is more around 11.5 billion. So we're well below that here on a Friday afternoon, a summer afternoon, where maybe a lot of folks are off doing whatever they do this time of year.
Working diligently from home, Romaine.
Right. We should try that sometime. The Dow Jones Industrial Average looks like it's going to finish the day down by about 0.1%. We'll call it 45 points as we wait for these numbers to settle. The S&P 500 down less than 0.1%, but still in the red. Meanwhile, the NASDAQ Composite flipping into the green as we get to the closing bells, but only higher by about 0.1%. And the Russell 2000 looks like it's going to finish the day. We're basically just going to call it unchanged here. It's basically down. I can't even look at that. It looks like it's less than 1 point here. But overall, we should point out all of the indices right now, Carol, are higher on a weekly basis.
All right, well, good to know. And if you care about the VIX, some of us do, some of us don't. We did actually see the VIX move down about 1.25 points today, coming in about 24.8. So certainly well below 30, below 40, levels we've seen certainly in the past when there's been moments of volatility and concern, but not today, Tim.
Yeah, not today. Look at this. If you look at the S&P 500, as I mentioned, it did go between positive and negative territory close to 20 times today. But 340 stocks declining 159 advancing in the Dow, which I know Romaine likes to follow really closely. 21 declining, 9 advancing today. Half and half.
You certainly see that when you take a look at where we are on the sector level and sort of the quietness on the headline number, the unquietness that we're getting on sort of the individual sector levels. There's some green here, right? Auto components, food and staples, some of those retailers, you're up almost 2% to maybe about 0.5%. Down at the bottom, though, there still is a lot of red as you think about the composition, still tilted to the downside just a little bit today. It's sort of a mix across the board. It's utilities, but then there's materials, there's transportation. There's also some household products in there. So you're certainly getting a mixed picture today, Carol.
WD-40 here.
I love WD-40.
Do you really?
It's my favorite product.
That's a preview for what's coming up with decliners. Okay.
All right. Well, we'll get to that in a moment. Let's get to the gainers today. I've talked about this name a lot. Tesla. It's been on a bit of a roll. No pun intended there. A roll over the last 4 or 5 days. Up another 2.5% in today's session. Up about 10, 11% over the past 4 to 5 days. Big headline out of Asia overnight. Record number of China shipments at their factory. They're up 145% month over month. Don't forget, he is going to be speaking from Sun Valley tomorrow. So we'll see what he has to say. I've got a Twitter poll whether he's going to talk about humanoid robots or kids or Twitter. We'll see what everybody
he loves
thinks.
Kids, right?
Right. He says he's going to offer more childcare, right? Didn't he?
Yes. I mean, he should.
Or childcare benefits. Well, that's another discussion for 60 minutes. XPO Logistics up 2.3%, also an outperformer. Trucking freight company. Morgan Stanley upgraded it to overweight, called the stock too cheap to ignore. And then I just want to mention Vita Coco. It is up almost 12% in today's session. BofA Global Research raising its recommendation to buy from neutral, saying potential upside to the calendar year 2023, and said that the ocean freight market is showing signs of stabilization and pricing continues to ease, and that should be a boost to that name. Take it away, Tim.
All right, you got the gainers, Carol. I got the decliners. Let's start with Twitter. Shares finishing the day down by close to 5%. We'll go ahead and call them 4.9. This after the Washington Post reported yesterday, after the markets closed, that Elon Musk's proposed takeover is in, quote, serious jeopardy. That deal spread right now between the price that he offered, $54.20 a share, and where it's trading right now at its lowest since late May, widest since late May. Let's talk WD-40, though.
Still my beating heart.
Right, this is the WD-40, right?
I
because
love WD-40.
You do, as a company or as a product? Because
as a product. She just sprays this around.
All right, well, this one's for Caroline then. Shares finishing the day down by 15%. It's actually having its worst single day ever. This after the company cut its full year forecast for sales and earnings. Gary Ridge, the company's CEO, saying that inflation leading to lower margins and causing the company to take down its guidance estimates for the year, experiencing, quote, short-term margin pressure due to inflation. And Upstart finishing the day down by 19.7%. It's an AI lending platform. You know it because it was kind of like a meme stock last year and earlier this year. Shares are down 93% from those October highs, but it's finishing lower today because the company said preliminary revenue from the second quarter missed prior guidance.
Meanwhile, let's also look what's on the downside. And when you're looking cross-asset commodities, it is the metals under pressure. Steel was off by 3%. We're seeing iron ore off by 2%. You're seeing copper on a fifth weekly decline. This is we fear more about global growth than we really do about, well, some of the razor lights that certainly we saw in the jobs data earlier today. We are really focused, therefore, also on Brent crude. It was interestingly pushing higher, oil managing to steady, a little bit more of a second-day rally going on in oil. We're at $107 a barrel. So there's your inflation push potentially, and one that, of course, needs to be tamped down by the Federal Reserve. WTI crude up 1.9%, 104. I flip it over to the FX market, therefore. And interestingly, the Canadian dollar probably once again reflecting the moves in oil as we see the loonie strengthen a little bit. Euro actually strengthening 0.2%. We're at 101. Those voices, that ongoing narrative about potential dollar parity is still growing ever wider as we see the difference in overall borrowing costs and yields and where the Federal Reserve versus the ECB will go. We don't have the yen on here, but of course that's a story of politics and one, of course, of risk aversion, the very start of trade after that shocking news that came out from Japan regarding Shinzo Abe. I'm looking also at sovereign bonds and really, once again, a sell-off in Europe, UK yields pushing up. Interesting that Rishi Sunak, of course, who was the Chancellor of Exchequer, he's put his head into the ring for, well, becoming the future Prime Minister of the UK, Taylor.
We go from UK bond yields, Caroline, as you always do, back here to full faith and credit. And I think you mentioned sort of this global sell-off and the nature of that. You really see that not only on the day, but our producers do a great job of scrambling to get the weekly chart as well. And really, Carol, for me, the focus has been on the front end of this yield curve. You're up 27 basis points. But I think what's so interesting, 2 weeks ago, we were at 312 on the 2-year. We dropped to 284. Blink and you miss it. We're right back up to a 310. So this feels like a big move higher, but it's just erasing the losses of yields that we had a week ago. We're right back to where we started in just 2 weeks.
I think the bond market has really been the story once again, or continues to be the story in those big moves. And I guess this is where investors are trying to figure out, where is it? Where does it settle out? Where is the equilibrium ultimately? And trying to figure out how aggressive ultimately the Fed will be when it comes to moving up rates and where it needs to settle in. And that volatility in the bond market, it's a little disturbing.
It's disturbing, and I also sort of think it kind of ignores, I think, the messaging that we've been getting out at the Fed, which I frankly think has been actually relatively consistent.
Right.
And today we've heard from a couple of members, including Raphael Bostic, who I know isn't actually a voting member this year, but the idea here that most of these Fed members have basically said, look, 75 basis points, that's going to be the discussion at that July meeting. Maybe they'll only do 50 if they think it's warranted, but there's no sense here that the Fed is ready to let up quite yet.
Well, you got to take it all in now because come July 16th, there's going to be the blackout before the next Fed Fed meeting. So we do expect to hear from more Fed officials to give us more insight into what they're thinking about when it comes to the economy, what they're thinking about when it comes to interest rates. But come July 16th, no more hearing from the Fed.
Oh, unless it's like last month.
Yeah. Never say never, right? Unless there's a leak about a 75 basis point rate increase.
We don't need leaks anymore, I guess. It's less shocking. We've been sort of steered that direction overall, and we all wait, of course, with bated breath at some of the data that's going to come out before that. And really, for me, what the banks start to say in earnings, that comes in thick and fast next week. And where are they seeing the consumer?
Yeah, that's where I was thinking, Caroline, as well. 2 days before that blackout period, we get earnings from the big banks. I'm thinking about JP Morgan and others and what they have to say about the environment, the lending environment. If lending is slowing down a lot, that is certainly going to give me some cause for concern.
And I remember last quarter, I mean, they all kind of reasserted this idea that consumer spending, at least with regards to their credit card data, was holding up, and that was an encouraging sign here. I do think it will be interesting to hear what Delta Airlines has to say, particularly when you have sort of a company that seems to have plenty of demand, but just can't really sort of get its, I guess, supply side, if you will, under control. So I think sort of the idea that even if you have that demand, are there other sort of disruptions in the economy going to sort of undercut any benefits from that?
Can you guys believe this was a shortened week?
Yeah, I know.
All right, well, that's going to do it. We got to run. Certainly lots to come next week, but that's going to do it. That's a wrap for our Beyond the Bell, our cross-platform coverage on radio, TV, and YouTube. We will be back tomorrow. Not tomorrow. Well, you can come in tomorrow if you want. But
if you're going to watch Elon Musk again.
Exactly. I'm looking forward to that.
What's he going to talk about, Carol?
I don't know. Check out my Twitter poll. We'll see what people have to say.
I saw your Twitter poll. Did I vote on it?
What do you think?
Well, it said kids, humanoids, what was it? Starlink?
Twitter, Starlink.
And so then Twitter.
Yeah, exactly.
I would hope he would talk about Twitter.
I hope he talks about none of the above.
Guys, have a good weekend. We'll see you back on Monday. All right, you are listening to Bloomberg.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right. It's always fun when we get to wrap up on a Friday. I really do love our gang over there. I do wonder what Elon Musk will talk about.
Let's get now to world and national news for Nancy Lyons in D.C. Hey, Nance.
Thanks, Tim. President Biden is launching his sharpest attack yet on the Supreme Court's decision to eliminate the nationwide right to abortion. Speaking from the White House today, he called the ruling a horror and said much of the country is experiencing, quote, a giant step backward.
What we're witnessing wasn't a constitutional judgment. It was an exercise in raw political power.
The president signed an executive order that aims to protect access to abortions, but it does not restore the availability of abortion in states that have largely outlawed the procedure. After speaking at the White House, President Biden went over to the Japanese embassy to sign a book of condolences on the death of former Japanese Prime Minister Shinzo Abe. He was assassinated while speaking at a campaign rally for his party candidates ahead of Sunday's parliamentary elections. As Bloomberg's Kurumi Mori reports, Abe leaves behind a lasting political legacy.
When he came to office for the second time in 2012, he launched this unprecedented effort to revive Japan's flagging economy. Of course, he is the foreign policy hawk. He hoped to end apologies for past imperialism, reinterpreted the country's pacifist constitution to loosen restrictions on the military.
Bloomberg's Kurumi Mori reports a military veteran is accused of shooting Abe with a homemade gun. It's been a long day of questioning behind closed doors for Pat Cipollone, the former White House counsel to President Trump. He is complying with a congressional subpoena from the House January 6th committee. 2 more public hearings by the committee are planned for next week. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic, live here on Bloomberg Business Week. So there's a story that I wanted to get to. Alice Cantor of Bloomberg wrote it, and she says, if you're looking for a place to find love, New York City is apparently not it. Now, you and I were taken, we're spoken for, and all that good stuff.
So, yeah, we're not moving anywhere.
We're not moving anywhere.
But
I did find love in New York City, by the way.
I did too, and that's what I was thinking about. Okay, this is from Zillow. Okay, this is an analysis from Zillow. So, you know what? You got to take it with a grain of salt here.
Mm-hmm.
The cities for singles, Zillow says, is Wichita, Kansas, the top city. Yeah. Okay, it says that it's based on the availability and affordability of apartments for single people, as well as the share of the local population that is not married.
All right, so Wichita, a city of about 400,000 people, that is roughly halfway between Manhattan and San Francisco.
Like roughly halfway.
What? It's like, when you go to some, I don't know, like tropical island and they have those signs that are like, here's where Paris is, here's where Germany, here's where New
I feel
York
like you're
is.
talking about Margaritaville.
Margaritaville. Thank you very much. Well said. All right, so anyway, Wichita leading the way because the typical monthly rent for a single person there is $966, according to Zillow. The report did note, though, that Wichita doesn't have a large single population, but is the most attractive place to relocate to because of its incredible affordability. Well, wait a minute. Just because I can afford an apartment, if I can't find
It's not just affordability.
All right.
It's availability of apartments, too.
Oh,
but I guess that is directly related to affordability because this is a supply and demand issue that we're talking about. Let's talk about some of these other cities, Carol.
Yeah.
Austin, Texas is number 2.
Nice.
And look at the way the typical rent jumps up there for single people. $1,869.
So like double.
That's the number 2 city. Milwaukee, Wisconsin, Denver is in there. San Antonio, Houston, Dallas are in there as well. Boston coming in at number 10. Typical rent in Boston, $27.88 for a single person.
Wow, that's a lot.
New York didn't even make the list.
No, didn't make the top.
4 cities in Texas did.
Yeah, that's interesting. Yeah, they're right to see Texas lead on that. Yeah. Well, there you have it, folks. So if you're looking for love in all the right or wrong places, maybe Wichita is the place for you. At least it's going to be affordable. This is Bloomberg.
insights, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Courtney Donahoe from Bloomberg World Headquarters. Weekly gain for stocks, but a slightly lower finish for the Dow and S&P. The strong jobs report alleviating recession fears. Non-farm payrolls rose 372,000 last month. The unemployment rate holding steady at 3.6%. And we check the markets for you every 15 minutes throughout the trading day on Bloomberg Radio. The Dow right now down 46 points, 0.2% at 31,338. The S&P finishing down 3 points, 0.1% at 38.99. However, the Nasdaq up 13 points, 0.1%. Taking a look at the 10-year, down 23 seconds at 3.08%. In other news, at CVS stores and other drug chains, shoppers are seeing more locked cases as retailers attempt to prevent theft. The Boston Herald reports more small and valuable items such as baby formula, detergent, and skincare products are moving behind locked doors, with shoplifting shooting up dramatically. And a newly recorded version of Blowin' in the Wind by Bob Dylan, nearly 60 years after the iconic song was first released, sold at a Christie's auction house in London to an undisclosed buyer. Buyer paid $1.8 million, well over the range expected. And that's a Bloomberg Business Flash. Carol and Tim?
Thank you so much for that update, Courtney. Bloomberg Business Week is brought to you by Informatica. In the cloud, your data has the power to do the extraordinary. Manage data across any location in the cloud for accurate and actionable insights. More at Informatica.com.
Well, Tim, on the Bloomberg today, a note out from Bank of America saying that recession fears are prompting investors to dump stocks again. Nearly $63 billion flowing into cash in the week through July 6, while global equity funds had redemptions of $4.6 billion. Again, according to B of A, they noted some EPFR global data. And so we're looking forward to getting some thoughts on the markets and also an event that's happening this weekend with our next guest.
For that, we turn to Jonathan Thomas, the president and a CEO at American Century Investments. Jonathan joins us this afternoon on Zoom from beautiful Lake Tahoe. Jonathan, good to have you with us. How are you?
Fantastic. Thanks for having me.
Wow,
on the
if
show.
you're watching us on YouTube, check out that
gorgeous.
view. He's got the lake behind him. As a Californian, are you on the California side or on the Nevada side right now?
I am sitting on the Nevada side. I'm pretty sure because there's a casino right across the street.
Yeah, that's a good clue. It's good to have you with us, Jonathan. Thanks for joining us. Hey, I want to get to markets, and then we're going to talk about what you guys are doing for the championship golf tournament. I want to talk risks here. When you look out across the landscape right now, what do you see as the biggest risk?
Well, I mean, probably we've been talking about this all day, I would guess. I mean, inflation is the big issue. If you kind of think of things that are going to affect the market going forward, you got unemployment. And I know we just had the jobs report coming out this morning, but that doesn't really tend to be much of a leading indicator. It's more coincidental or maybe even a lagging indicator. You've got the consumer side of things. That's actually staying fairly resilient. Though underneath the big number, you can see some shifting in behaviors from different to different sectors of the market, more to staples and travel actually than high margin luxury items. And then that really leaves the interest rate issue or inflation issue, pardon me. And that has a lot of contributing factors to it. I think this morning what you saw with that jobs report and then the markets coming down right afterwards, and I think the markets read that accurately, is that they must have interpreted that as that gives the green light to the Fed to be a little bit more, give them a little more headroom to go ahead and with that 75 basis point increase that they've been contemplating. So I think that's probably one of the bigger short-term risks that we're facing right now is the Fed's got that comfort leeway, if you will, to go ahead with that increase.
Jonathan, you know volatility can create opportunities or it can create runs into cash. Investors just kind of getting freaked out and saying, I'm out, I'm done. What are the money flows that you guys are seeing, whether it's into sectors or areas, when it comes to your client base?
That's really funny. There's a couple different themes I could talk about there. We see a lot of, obviously, from the growth, aggressive growth stocks, people are pulling out of that. We also have inflation-protected products, money flowing into those. We have a very large value suite that is actually attracting assets as well after, kind of 9 years of being out of favor, really, since 2013. And then the other thing on top of kind of a sector look is, we have this new product line we have called Avantis, and it's this interesting product that's driven by financial science, and it's really a combination of both passive investing and active investing. And we've actually had tremendous inflows into this Avantis product set all year long. In fact, despite what you've seen in the market with the pullback, it's taking in over $150 million per week net every single week this year.
All right, let's talk a little bit about golf. It's Friday afternoon. Looks like you're wearing a golf shirt, Jonathan.
Yes, I am.
Talk to us about what's going on with the American Century Championship Golf Tournament, because this is the 24th year as the title sponsor.
Yes, sir, it is. So this is first for us. This is a really important platform. You must be able to see the brand there. The funny thing about this tournament has been such a success that when people see this shirt nowadays, they actually say, "Oh, you run the golf tournament." I was, well, 1 week a year we run a golf tournament.
That's
and
funny.
52 weeks a year we run over $200 billion in assets. But what we have here is an incredibly unique golf tournament. It's the Super Bowl of celebrity golf. We have about 87 celebrities, literally the best in their fields, either from entertainment. You got Nick Jonas and Justin Timberlake, Alfonso Ribeiro, and two athletes, Tony Romo, Patrick Mahomes, Steph Curry, are all out here. And these folks are competitors. And, while they're out here having a good time, they are dialing it up in terms of their intensity and working really hard before and after the rounds you see on TV to dial their game in. So it's a neat event. And, I will also throw one more thing in there. While this event is super neat, our company is super unique as well. You may or may not know, but we direct over 40% of our profits each and every year to medical research to find a cure for cancer and other gene-based diseases. It's been $1.9 billion over the last 20 years. And the celebrities, in large part, are very inspired by that, like our employees are and like our clients are. And I think that's been a big draw and one of the reasons we are able to take such big names here year after year.
Well, I agree with you. And we've talked to some different members of your team. And I think that the way you guys invest your profits, it is really very different from a lot of investment firms. So I think it really does set you apart. Good luck this weekend. Sounds like it's going to be a great tournament. American Century Investments President and CEO Jonathan Thomas joining us via Zoom from a gorgeous Lake Tahoe. Tim, we are definitely in the wrong place right now.
Yeah, it's always a beautiful day in California, if I can say so. Or he's in Nevada, so... Yeah, he's on the Nevada side.
That West Coast, man, really has it locked up, I got to say. All right, we've got more to come. We've got a great guest coming up. We're going to talk about the restaurant industry globally and what's going on. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is Bloomberg Business Week. We are live on YouTube, of course, on Bloomberg Radio. Carol Master, Tim Stenovic. And Tim, one of the sectors we talked about a lot over the last couple of years, hurt so hard by the pandemic, was, of course, the restaurant industry. And coming up, we've got a great guest to talk about the global view of what's going on in the industry.
Yeah, we got Chef Richard Sandoval, the founder of Richard Sandoval Hospitality Group. He's going to be joining us on the phone from Italy. He's going to be joining us from Tuscany, so looking forward to that conversation. First, though, let's get a check on everything happening after hours. Here's Courtney Donahue.
Hey there, Tim and Carol. After lots of ups and downs this session, a mixed finish for stocks. The Dow and S&P lower, the NASDAQ ending the day higher after a big week for tech shares. Strong jobs report alleviating recession fears. Payrolls rose 372,000 last month, topping estimates. The unemployment rate unchanged, 3.6%. We do have breaking news. The U.S.'s long-term foreign currency debt rating has been revised to stable from negative by Fitch. We'll continue to follow this breaking news for you. And we check the markets every 15 minutes throughout the trading day on Bloomberg Radio. The Dow down 46 points, 0.2% at 31,338. The S&P down 3 points, 0.1% at 38.99. The NASDAQ finishing up 13 points, 0.1%. Taking a look at the 10-year. The 10-year down 23 seconds with a yield of 3.08%. Taking a look at the 2-year yield, 3.10%. NYMEX crude up 2%, 104.84. COMEX gold, 1739.90. The euro, 101.83. Your top business stories. Big bankruptcies piling up in America. June was the busiest month for large corporate bankruptcies since March 2021. That's according to data compiled right here at Bloomberg. Some of the factors: borrowing costs have surged and goods can't get from factory to retail floor fast enough. And feet, don't fail me now. That's a battle cry for the footwear industry, but tougher times may be ahead. According to a survey from the trade group, the Footwear Distributors and Retailers of America, 87% of footwear companies expect weaker sales in the next 6 months. However, if you are a shoe fanatic, nearly half say more discounts will be ahead in the next 6 months. I'll be on the lookout. And that's a Bloomberg Business Flash. Carol and Tim?
All right. Thank you so much, Courtney Donahoe, there with a Bloomberg Business News Flash. So you are listening to Bloomberg Business Week. Tim, I am thinking a lot about the week that was and the week to come, especially as we just get into earnings season. I think it's going to be an important one. We still know we expect earnings growth, but we'll see what we get in terms of margins and the commentary. But I think it will really help shape the tone against a week that's also going to be full of some really key data points.
Yeah, let's talk about some of those earnings that we have coming up. We've got Delta Airlines next week. We've got United Health Group. In addition, Carol, to the big banks, which we're going to be looking at very closely for ideas of consumer spending and what kind of position consumers are in from when it comes to, their own wallets and how their spending has shifted as prices have become higher. Now, you did mention the data that we're going to get next week as well. On Wednesday, we're going to get headline CPI, perhaps at a fresh high. That's at least what the economists surveyed by Bloomberg are expecting. Because gas prices have just gone so much higher, even though they are down about, 5% from where they were at the peak, they're still pretty high.
Yeah, it is pretty, right? It's still pretty hefty and a big lift for many Americans. We all kind of look twice when we're paying for different things, and certainly at the pump. So we'll get that. We'll get PPI. That will be followed. So we'll get prices at the producer level. That's also important. And then we're going to get a check on retail sales for the month of June. So we'll get an idea of how consumers have been doing, where they've been spending. And we've also got some sentiment numbers. So all of this, like I said, for me, I think about matching that with what we get from the C-suite commentary following the earnings as they just begin to get underway. And we'll get a feel on different sectors. And one sector I've thought a lot about is the restaurant industry over the last couple of years. We've been very lucky to get to some really strong and connected voices, if you will, in terms of the industry and some of the struggles, and then also coming out of the pandemic. And the next guest that we have plays into that. Chef Richard Sandoval is the creator of La Biblioteca, Toro, Maya, so many more. He's the founder of the Sandoval Hospitality Group. They've got, I think, roughly 50 locations, 4 continents, 9 countries, 10 U.S. states. In the company's own words, they are ever evolving. And Richard joins us on the phone from Tuscany, where I think it's a pretty gorgeous day, although the phone connection, we're keeping our fingers crossed. Richard, how are you?
Great. Thanks for having me.
Well, it's great to have you here. First of all, give us a little background in terms of the impact the pandemic had on you guys and then kind of where we are in contrast today.
Right. Well, obviously, we had to furlough everybody when the pandemic hit. I mean, we closed every restaurant around the world, so it was very impactful. As you know, luckily, the government helped us with PP money, so it helped us, stay afloat. And then all of a sudden, as the pandemic started to go away, just the numbers of people, wanting to get out into the restaurants and get out of their homes was staggering. So, our numbers just skyrocketed. As you were saying, though, we had our challenges, with labor, with supply chains. So it's been a balancing act. But luckily the numbers are there. People are back, going to the restaurants, and the numbers are looking very good.
Well, you've got a great view because you've got 4 different continents, more than 50 restaurants around the world, and I'm wondering what you can tell us about regional differences when it comes to the bounce back that you've seen in recent months, Chef. What are you seeing? Where are you seeing differences, and what are those differences?
Right. Well, I think the biggest difference is, the bigger cities were much more impacted. For example, New York, has been more challenging. I think, a lot of people left the big cities, and also, people are working from, these new, hybrids of, 2 days, at the office, 3 days at home. So you're not seeing the density in the big cities as far as, lunch business. But for example, the tourist destinations, for example, the mountains, the resorts, like for example, the Ritz-Carlton Laguna. We've never seen this kind of business. So I think it just depends on locality and, where people feel more comfortable, going out.
Richard, how much of your business is tourism? How much is business? I don't know how much of the demographics you guys are able to analyze.
Well, I think it depends on the destination, right?
Yeah.
Like I said, New York, for example, if you're in Midtown, obviously depends, their lunch business, highly dependent on businessmen. But for example, the Ritz-Carlton, the mountains, it's mostly tourism. Denver, proper, downtown. We haven't seen our lunch business come back as strong as we have our dinner business. So I think every area is different, and for us, we're in so many different places that we have different challenges in different locations.
Yeah, that sounds fair. Hey, listen, just sit tight for a moment. We've got to do a little bit of news, and we're going to come back, though, and continue the conversation. We want to hear about what you're doing because you've got some new concepts in Athens and Marrakesh, so want to get to that. We're talking with Richard Sandoval, founder of the Richard Sandoval Hospitality Group, joining us on the phone on this Friday from Tuscany, so we'll continue with him, Tim, in just a moment.
All right, well, from Tuscany, we go to Washington, D.C. now, where we get a check of the latest world and national news. For that, we turn to Nancy Lyons. Hey there, Nance.
Thanks, Tim. President Biden has signed a promised executive order titled Protecting Access to Reproductive Health Care Services. He lists steps, although limited, to countering the impact of the Supreme Court decision on abortion. Bloomberg's Irv Chapman reports.
The president announced what he saw as the court's totally wrong exercise of raw political power and state laws so extreme that a 10-year-old girl who'd been raped had to travel out of state.
I'm asking the Justice Department to do everything in their power to protect these women seeking to invoke their rights, protect them from intimidation, to protect the right of women to travel from state that prohibits seeking medical attention to a state to provide that care.
The president also called for action to keep web searches and location tracking out of the hands of anti-abortion prosecutors. In Washington, Irv Chapman, Bloomberg Radio.
Japan is mourning the loss of its former Prime Minister Shinzo Abe, who was Japan's longest-serving premier. He died after being shot during a campaign event. The current Prime Minister, Fumio Kishida, who served as foreign minister under Abe, denounced the loss of his, quote, good friend in what he described as an act of despicable barbarism.
We must protect elections as the foundation of democracy. I am determined to continue this election campaign to show that our democracy will never give in to these kinds of violent acts.
Kishida says his government will do all it can to ensure security at Sunday's election. The U.S. Postal Service says customers will see an increase in prices this weekend. Effective Sunday, first-class forever stamps and the cost of sending a 1-ounce domestic letter will go from 58 to 60 cents. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you very much, Nancy Lyons in our Washington, D.C. newsroom. We're going to get back to Richard Sandoval, chef founder of Richard Sandoval Hospitality Group, talking about the restaurant industry. He's around the globe, and we'll also get to some of the expansions he's done as of late. He's talked to him about tourism, right? And depending on where his restaurants are located, some of it's a business customer, some of it's tourism, and he has seen some tourism activity, which brought us to this next story, which talks about two of Europe's biggest airlines announcing another round of cancellations, adding to the disruption that has turned the travel sector's pandemic recovery summer into a nightmare. We saw some of it when we did some business travel.
Yeah, we did. We were pretty lucky, though, because there have been a lot of horror stories, Carol. And it's not just the United States that's experiencing trouble. It's happening around the world. Look no further than the Dutch arm of Air France KLM. They're planning to cancel as many as 20 round-trip flights to European destinations every single day, that through the end of August. And then you've got Lufthansa saying that it will cancel 770 flights in the coming week.
That's a lot. And this, as you say, it's really about the European aviation industry. And so what's going on? They've got labor disputes, they've got staffing shortages, and they're cutting, and cost cuts, I guess, during the pandemic that really are now coming back to haunt the airlines in a big way.
It's the same thing that's happening here in the U.S.
Right.
Although we have the added benefit of some nasty weather at some hubs.
Right.
Namely Texas, and then on the East Coast here, Newark, JFK, and more, disrupting airlines too.
Did you see this line in the story? KLM's measures are designed to, quote, calm operational stress on staff at the airport and within the airline, the carrier said in a statement Friday. I feel like on some of the flying we did...
Were you calm?
I got my pinkberry yogurt and I was pretty happy. But I mean, I could see it in the staff.
Yeah.
Where they were... there were lines of people, there were delays, and there weren't a ton of staff members to deal with it.
It wasn't
and there were
just
kiosks
the
that were down too that weren't helping the situation.
It wasn't just the airlines, Carol. I was in a different terminal than you in Dallas, and I went to buy something, and the guy there was just so overwhelmed. He's like, "I'm not doing this anymore." It was unreal.
Get ready for more. All right, we're going to get back to our guest in just a moment.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Courtney Donahoe from Bloomberg World Headquarters. Wall Street has come a long way in its 4-day trading week, or 3 days really, since stocks didn't go far in either direction today. We check the markets for you every 15 minutes throughout the trading day on Bloomberg Radio. The Dow finished the day down 46 points, 0.2% at 31,338. The S&P down 3 points, 0.1% at 38.99. The Nasdaq higher, up 13 points, 0.1% at 11,635. But for the week, the Nasdaq up more than 4%, the S&P up 2%. Investors didn't worry too much about big interest rate hikes or high inflation even today when the Labor Department did not report the cool down in the labor market that was predicted. Instead, employers added 372,000 jobs in June. And being hangry is real. A new study says there's a link between hunger and anger. Though researchers were able to associate negative emotions with hunger, USA Today says it's unclear why hunger could sway emotions. Researchers suggested low blood glucose levels could be triggering irritability, or people could just be annoyed or irritated quicker than usual when hungry. So that's my cue for
Are
a
you
snack.
telling us we need a study to? I mean, I just had a banana.
I did
I'll tell
too,
you about
Carol.
hangry. Yeah, Tim and I.
It's our banana time. It's banana o'clock.
It's so we don't get hangry.
I'm ready. I'm ready for pretzels and a beer. It's the end of the day now.
See you there.
Getting there. All right, kiddo. Thank you so much, Courtney Donahoe. There. Want to get back to our guest. We're talking with Chef Richard Sandoval, founder of Richard Sandoval Hospitality Group. He's still with us on the phone from Tuscany. Tim and I mentioned earlier, they've got around 50 locations, 9 countries, 4 continents, 10 U.S. states. So they really have a great snapshot of what's going on in the hospitality industry. So, Richard, how did coming out of the pandemic, how did it, if at all, kind of shape maybe what you wanted to do next?
Well, I think it helped us, almost, like recessions. It helps you make adjustments. You have to, react quicker. We had a big problem with supply chains, which was a big challenge for openings that we had coming along. So a lot of our openings have been delayed. I think what we did is, we reacted and started going towards, more local products. For example, Marrakesh, our OSNE, which is all our China, glassware, silverware, was on a boat. Was 3 weeks delayed. So we went actually to local markets and started buying, local products. So I think, and even in the U.S., because of inflation, we've had to go more towards, local, to get better pricing, seasonal products, to help, keep our costs down, because, you can't, just transport all the costs to your guests. It has been very challenging. Like I said, we've also had to, work with smaller menus because of the, labor issues that are happening in the country. So, we trimmed our menus down, to be able to cut, some of our labor in the back of the house.
Right.
So again, I think right now it's very important to be very reactive to all these things that are going on, because there's just too many things happening and very fast. So you have to be very, very, very reactive.
So, Chef, I'm wondering, you mentioned inflation, and this is really where I want to go. I'm glad you brought it up. Help us understand how much prices have gone up since before the pandemic. If we were thinking about this from the perspective of, February 2020, January 2020, how much more are you paying for labor? How much more are you paying for ingredients? And then how much more are guests paying at restaurants as a result?
Right. So first, labor. It's probably 3 to 5 points on our budget. So we've had to make price increases to make adjustments to that. As far as inflation, I think we're probably seeing a 35 to 40% increase on some of the products from pre-pandemic to now. So again, we've had to pass some of the costs over to our guests.
I didn't quite get that. Your phone cut out. Let's try to get that one more time, Chef. The numbers again, please.
Yeah. Right. So labor's probably affecting our P&Ls probably 5 points, I would say. What do you understand is that having to pay people a lot more than before. Just
We are having some technical problems. Richard Sandoval, we're talking with, founder of the Richard Sandoval Hospitality Group. He's on the phone from Tuscany. He's in a rural area, and he's been really kind enough to move around to try and get us a cleaner line, because we'd love to. I thought I did, he was talking about numbers and his higher costs. He talked about 5 points, I guess percentage points maybe, when it comes to higher costs for labor. And then he said...
I didn't get the ingredients part, though.
Was that 35 to 40% is what I think he said.
I wouldn't be surprised, given the rising prices of commodities that we've seen. I mean, Carol, wheat alone today surging. So I am, and we've seen a pullback, though, to some extent.
Right.
It also is very regional, and that's an area where I want to go with the chef.
Richard, you're back. Richard Sandoval's back, and thank you for your patience. Richard, I know you're out there in Tuscany, and it's not so easy for cell service. You talked about labor, and I think you said about 5 points higher in terms of what you're paying. Ingredients, can you just reconfirm that? I thought you said 35 to 40% that you're paying higher as a result of kind of today's current environment.
Yes, we've seen that. In some products, yes. So again, it is very challenging. As you know, we've seen the government reporting. I mean, inflation at 9%. So yeah, I mean, 2 years ago, we're seeing probably 30% on some products. So
yeah.
The only way we're able to make up for that is, I'm sure you're seeing it wherever you're at. I mean, restaurant, menu prices have, gone up significantly over the last 2 years.
Tim,
I think the other thing that I mentioned, go ahead, sorry.
No, please continue.
So I think what we're being able to make also adjustments is by using a lot more local, purveyors, local farmers, a lot of, more seasonal ingredients, and work through that to be able to, at least have some containment.
Richard, I really want to get to the new concepts that you're working on around the world, starting in Athens and then to Marrakesh, because you've got projects all over the world. Give us an idea of what you've got cooking in those places.
Right. So Marrakesh, we're opening a Toro, which is one of our global brands, and it's our first Pan-Latin restaurant going into Marrakesh. It's about a 150-seat restaurant. It's right next to the Four Seasons and the Four Seasons residences. That was supposed to open last week, but because of supply chain problems, got postponed. So we're hopefully opening it in 2 weeks. We're very excited to be in the African continent, so very excited about that project. And then then Athens, we're opening a beach club in Athens. It has about 500-seat capacity, 200 sunbeds, plus a 300-seat restaurant. So yeah, we're super excited. It's our first beach club. So yeah, we're very excited to be opening up next week.
All right, I'm ready to go. I'm headed. That sounds like magical. Richard, good luck with everything. Thank you for enduring some of the technical problems, because we really wanted to hear from you directly, and so appreciate it. Good luck with everything, and hopefully we can talk again soon in the future. Chef Richard Sandoval, of course, of the Richard Sandoval Hospitality Group, joining us on the phone from Tuscany. So I don't know about you, but I will be checking in over the weekend, Tim, about Elon Musk from Sun Valley. My Twitter poll is up. Please vote.
I voted.
Did you?
Yeah,
So okay.
I voted for Twitter.
Okay, my
Should
question.
I not reveal my vote?
No, you can. My question was, what will Elon talk about Sun Valley? Kids, Twitter, Starlink, humanoid robot. And what did you say? You said Twitter?
I said Twitter, yeah.
Do you know that is the least? It's about 17% of the vote. The biggest one, actually neck and neck. Oh my God, this is so weird. Equal amount for kids, Starlink, humanoid robot, 27.8%.
For each of those three? Wow. I know how to pick the last one.
I think somebody's playing around with my voting machine here.
They can't. You can only vote once on Twitter.
Oh my goodness. It's been quite a week. It's so good to be back with you. Best to your family and to all those families out there.
Thank you, Carol. You too. For Bloomberg Radio, Tim Stenevec and Carol Masser, this is Bloomberg.